please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back then. Markets holding mildly in the green. Mid-caps are doing a relative underperformance, but the big number today is going to be Infosys. We'll be keeping an eye out on that stock. Rima, what do we expect there?
Well, Q1 is seasonally strong, so the performance will be better compared to what we had in the prior quarter. Dollar revenue growth is seen higher by 1.5%. Constant currency growth slightly north of 2.5%, but it will be short of what TCS delivered, which was a 4.1% growth. Margins will be seen down close to about 100 basis points to 23.6%, impacted by the wage hikes as well as the visa costs, and only partly offset by the 4% rupee depreciation. Profit, according to our poll, will be up about 1.5% on a quarter-on-quarter basis. Let's talk about the full year performance then. On the guidance, their constant currency revenue guidance of 6 to 8% is likely to be maintained, but their dollar revenue guidance of 7 to 9% could be revised lower by 100 basis points on account of the dollar strength, which results in cross-currency headwinds. Margin guidance currently stands at 22 to 24%. It was lowered the last quarter on account of the investments the company has to make in their own business. Now, the question is, since then, the rupee has depreciated by nearly 4-5%. So will the company look to revise the margin guidance? That's going to be watched very closely. Other than that, we will also keep our eye out on the improvement of traction in BFSI. TCS reported a rebound. It saw growth of about 3.5%. If that happens, then you know it's an industry-wide pickup and an improvement in BFSI. So that's going to be one key factor to track. Secondly, leadership attrition. The quarter gone by saw resignations from the head of healthcare as well as manufacturing, Sangeeta Singh, as well as Nitish Banga. So more churn, more attrition is always negative for the company. Thirdly, we'll keep our eye out on TCV of deal wins that increased to an 8-quarter high in the prior quarter. If you compare the stock with TCS, TCS had a stellar start to the year. So TCS has been the big outperformer, nearly a 20% outperformance vis-a-vis Infosys. As a result of that, it's also trading at a significant premium. The premium is close to about 30%. But that seems to be partly justified on account of the differential in growth. TCS is expected to grow 10% in FY19, whereas Infosys is expected to grow 6 to 8%. So what can be a re-rating trigger for TCS? One is if growth is better than expectations and it comes closer to TCS's actual growth, or perhaps if there is an improvement in margin. Numbers should be out closer to 4 o'clock today, and the management will be briefing the press at 4:30.
Okay, all right. Thanks so much for that, Rina. Well, let's get a technical check now on the markets. We have Ashwini Gujral and Prakash Gaba who join us. Ashwini, coming across to you first. What's the trade on the Nifty? We're holding mildly in the green. Do you think it's going to be a bit of a down day in the last couple of hours?
See, early morning financials came in for a lot of selling. Now there is short covering on those financials. So my sense is the financials could make a comeback in the second half. Techs anyway are doing well. So for the moment, Nifty, Bank Nifty, you can buy. See, we're in a choppy range, 10,950, 11,050 thereabouts. But the early morning selling was kind of overdone, so possibly some amount of shorts may get covered. Also, mid-caps have recovered from the lows of the day, so some amount of upside may be seen even on mid-caps. For the moment, Escorts is a buy with a stop of 890, target of 925. Kotak Mahindra Bank is a buy with a stop of 1395, target of 1440. And JSPL is a sell with a stop of 212, target of 197.
Yes, the mid-caps have recovered nearly 60 points from the lows of the day, aided by up moves in stocks like a Titan, sorry, not Titan, but, you know, an Escorts, IDBI Bank, a couple of the other big movers in the mid-cap space. Ashwini, any thoughts on UPL? It's falling on very large volumes, down for the third day in a row. Is the chart suggesting a breakdown from here?
See, the breakdown happened at 750.
Okay.
Now it is probably in the final phase of the decline where it's fallen from 640 to 550 in 3 days. So I don't think it's a great idea to go short on UPL now. But I would think shortly you should find support on UPL.
So what could be an attractive level to enter UPL, to buy it?
See, basically, once something falls in this manner, you can broadly, start buying it. Something like, Shriram Transport. So say around, this 500, 550 zone, this is a good level to buy.
Big move in Titan, by the way. If you pull up the intraday chart, Titan is now higher by close to about 8.5%, sharp up move.
Okay, all right. Let's hop across to Prakash Gaba, who's with us. Prakash, what's your trade on the Nifty and what about the stocks you have for us today?
I feel the move that we have seen from the lower levels to up move still looks like a reactive up move, which basically means it's gone up. There's a good chance it can even slide on. Like I said this morning, we are into a kind of a pause zone. This looks like a pause here, and we could see dips as well. So I feel that we could be stock specific. HUL looks like a good weak stock here. Can see a slide to 1710 zone, stop about 1740. Titan looks okay. Can see a climb to around 840 zone, stop below 807.
Okay, thank you very much for that. HUL, remember, will be reporting numbers on Monday. The street is expecting a good quarter, a volume growth of close to about 11 to 12%, but the stock is anyway trading at record levels. I think it's rallied close to about 50% just in the last 12 months. So HUL is the stock to track even fundamentally ahead of numbers on Monday. Let's get the early rates from the European markets, expected to be in the green, and there you have it. So on an average, higher by close to about 0.5% on the CAC, FTSE and the DAX. Let's get you some corporate opinion then. Mangalam Malu, our colleague, caught up with the management of Jyoti Laboratories. The Troika at Jyoti Laboratories, the founder, the daughter and the joint MD speak together for the very first time. They spoke to Mangalam about their plans, the growth potential of their individual brands and their acquisition plans. Listen in.
The road to 5,000 crores in terms of revenue, when does that happen? How does that happen? What leads it?
It should happen by 2022. Our internal target is to double the turnover in the next 3-4 years. So by 2021, we should be about 4,000 and with 15% organic growth and balanced by inorganic growth. So my calculation is about 12% we should get from inorganic growth to reach that number. And we have plans for that.
You've laid out a war chest of 1,000 crores for inorganic growth.
Absolutely.
And acquisition should happen in FY19, FY20?
It should happen in FY20. FY19 will be ready. FY20 it will happen.
All right. At 5,000 crore, what does the margin profile of the company look like?
With our experience in the last 5 years as a management team, we have decided that we'll not get into any business which is less than 50% gross margin, less than 17% EBITDA margin, and that will be the profile going forward also.
And ad spends, at one point you all spent 50% of your revenue in advertisements, which was the Ujala campaign. Now it's about 9.5–10%. Where will that be?
In fact, you said it right. When we were 80 crore business, 35 crore is advertisement budget only on Ujala. 14% is what we think is more than sufficient for us to spend on advertisement and promotion. And as of now, we are at that level. If required, 1 or 2% we increase, but otherwise, healthy growth with a healthy spend is what we are looking at.
And you will focus only on India?
Yeah, at this point in time, next 5 years, every day we are looking at India, and we also focus only in India. And probably once we reach 4,000, 5,000 crore, then we'll be looking at Middle East and North Africa, and we also see from Singapore, Malaysia, and Indonesia at that point in time.
All right, so you have fabric care, dishwashing, you have household insecticides, as well as personal wash. Where is your acquisition?
We are comfortable, as I told you, that in the segments where we are now, but we don't mind looking at adjacent, which could be hair care, it could be body care, and we are open. We are looking at it. We have bankers to help us. Let's see.
The one segment you won't get into?
Food.
Food.
Yeah.
The stock of today is really Fortis. The deal has reached finalization. The board has approved the IHH offer. Earlier today, we spoke to Mr. Ashok Seth, the chairman of Fortis Health Institute, and he says that they're confident of providing even better health care with the partnership of a long-term investor.
It's welcome because it puts an end to a long period of uncertainty, which was certainly affecting operational issues and morale of all the, say, staff of Fortis Healthcare and especially the doctors. We are obviously looking at a new era in the healthcare industry with the IHH coming in. We are all glad that we are moving away from short-term investors who may have been in it for financial gains to a long-term investor who probably would partner with the ethos of belief of delivering high-quality healthcare. Strength of IHH and the strength of the long-standing clinical force of Fortis Healthcare are the two combinations which are going to deliver healthcare. IHH is going to bring in a lot of its processes into play, some of the benefits that they can provide to us. We are very positive that we would be able to provide that element of partnership which brings in cost-effective quality care to the patients.
All right, and the Fortis conference call is today at 1 o'clock with Mr. Ravi Rajgopal, the Chairman, Board of Directors of Fortis Healthcare, and Mr. Bhavdeep Singh, the CEO of Fortis Healthcare. So 1 o'clock, CNBC TV 18 will be cutting into it. We'll shift focus now to a CNBC TV 18 exclusive from the sidelines of the mining conclave underway in Indore. CNBC TV 18's Anshu Sharma caught up with Satish Pai, the MD of Hindalco, and began by asking him on the outlook for the LME prices for both copper and aluminium. Listen in.
If you've noticed that both LME prices for both aluminium and copper in the last few days have sharply corrected down. And the main reason for that is there is a worry of the damage that's going to happen between the US and China as they put tariffs on each other. Will the Chinese economy start to slow down? So I guess that is a worry for us with the prices. And I also worry because looking at the data of imports into India for April and May, year on year, the imports have gone up sharply by now 20%. So I guess the industry's worry here is that if Chinese imports cannot go into the US, and I've been saying this quite consistently, then they're going to come into India in a big way. And I guess the data from April and May is pointing that out.
Okay. In terms of price outlook, global supply, demand, how does India fare?
No, I think I guess you're talking about the LME price outlook. I think that, generally now the LME for aluminium and copper, looking at the supply and demand situation, should be stable.
Okay.
I think the Chinese production post the winter cuts have shown restraint, which is why generally analysts are expecting the LME prices for aluminium and for copper to be quite stable. The corrections that you're seeing and the volatility you're seeing today is largely because of this tariff and counter-tariff and the trade issues that are there between the US and its partners now.
Inorganic, organic growth, because in the steel sector we are seeing some consolidation. Are you looking at any assets?
So, this is, I guess, a pretty standard question and a standard answer that, yes, we always keep looking at opportunities for what makes sense.
But anything concrete which is on the verge of getting finalized?
That I have no comment.
And in terms of expansion, what plans do you have for FY19?
So FY19, again, we have been very clear. We're doing the brownfield expansion of the Utkal Alumina from 1.5 to 2. After that, we will look at another million-ton expansion there. We are doubling our downstream capacity from 300 to 600. We will look at another million-ton expansion there. We are doubling our downstream capacity from 300 to 600 KT. We just put in a copper rod mill that we are ramping up for Dahej.
Okay.
So quite a lot of what I would call value-added downstream focus is what we are looking at.
All right, interesting. Yeah, that's the big fear, really. There's going to be a war between China and the United States. Then if China cannot send all that supply to the United States, maybe, in fact, there could be some dumping into India as well.
What's the extent? Any numbers that you know offhand?
No. I would not. Maybe when Manisha comes, we'll try to ask her that. We'll try to ask her that.
And we can Google in the break right now.
Not really, actually, because it's an unknown thing, right? You don't know how much of Chinese production is going into the United States exactly, and how much of that will get deviated. So it's a lot of unknowns, actually. But that's the fear, and I mean, some of those stocks have been under some pressure. But on to a big market voice. Then earlier today, we spoke to Mr. Arvind Sanger of Geosphere Capital Management on the road ahead for the markets. He believes the rally in the Indian markets is very narrow, adds that the global trade risk will weigh on the Indian markets too.
Company's earnings season is off to a good start, and we should get some good results and some good signs of momentum from companies across different sectors. The mid-caps are clearly lagging in a big way. And it is a very narrow rally. The problem with narrow rallies is either they broaden or they fail. And to me, the jury is out on which way that will go, because a very narrow rally, which causes the index to go higher without broad-based participation, is not a healthy sign. The other risk factor remains global potential risk from trade. So, is China going to blink and back down and come to the table and do a deal with the U.S., or is China going to dig at its heels? So these are, things that I'm not confident one way or the other to make a big call. So we remain somewhat cautious, but looking for opportunities to buy individual names. And the rally right now is not that convincing because it's so narrow.
It's time to talk about what's happening in the commodity and the currency space. And Manisha Gupta joins in as always. Manisha, what do you have for us?
Thank you so much for that, Reema. Well, plenty. All the commodities really seem to be getting impact from the US-China trade war, and we have seen the commodity prices react to that as well. In this week itself, if you look at the base metal prices, they are closing the week on the negative. The copper prices are headed for a fifth weekly decline. It's down by 5%. If you look at the zinc prices, they, of course, had touched a 13-month lows in this week itself. Markets weren't anticipating a second trench from the US to come so soon. And, of course, we've seen China retaliate to that too. So, yes, that is impacting. The global experts tell us that even from here on, another 3 to 5% of decline in the base metal prices is what you can expect. But just not that. If you look at the soybean prices, those are hit quite strongly. We are trading at a 10-year lows in the global markets for soybean, and the Indian prices also have been under pressure. So everywhere that you look, this clearly hasn't been such a great week for commodities. Even the crude oil prices are headed for a second weekly decline, and we're down by 5% for the Brent prices in this week as well. But moving away from commodities, and remember, we have been discussing about the international financial markets as well. Joining us to talk more about what's really happening in India in that front is joining us now is Manish Kumar, co-founder Grex. Manish, hi, good to have you back on the show. We, of course, have been talking about digital India, fintech, blockchain, etc. as well. But you are launching a new platform, so tell us more about that, really.
So the idea is, few years old, Manisha. We really wanted to create a platform which harnesses the best in technology and financial practices that can be utilized for capital raising and investment into unlisted companies. Now, a lot has been done for listed companies, etc., and that gives them a lot of visibility, the air of transparency, etc. I realized that we can do the same for unlisted companies as well, and they can also grow themselves, help themselves, if a platform like which is more pertinent for the needs of unlisted companies is available. Now, when I say unlisted companies, it covers startups as well as SMEs, and so that was the core idea.
So, Manish, really, what is the market share that you look to accumulate here? What is the value addition that Grex really brings into the Indian markets with this platform?
Our flagship product is equity capital market. So startups and SMEs, very simply put, should now be able to raise capital on their own. And and being a private market of its own, they also go through continued obligations while they remain onto the platform, and they continue to be mandated by certain limited governance that we enforce upon the companies. This builds in further more trust, and companies can continue going further and raise further more capital while they are on the platform. So it's a kind of a new private market structure that we are bringing to the market, which heretofore did not exist for multitude of players that operate in the market to latch on to and operate.
Point well taken. Manish, also we do understand that when we talk about platforms, it's without the boundaries really. But when we do talk about startups and SMEs and MSMEs, etc., where are you looking at more interest coming in from?
Yeah, so the geography doesn't matter since it's a tech-enabled platform, so that wouldn't matter. We have a construct called sponsor that works with the companies. Even today, we have sponsors located from Chennai to Delhi, all over, and some requests coming in from Ahmedabad and things like that. So that doesn't really matter. The whole idea was to be able to go widespread and bring out discovery and transactions in these companies all across.
Sure. Manish, we do understand that these are early days, but what are the future plans? What are the goals and targets that you're setting for yourself?
We are looking at around 5,000 odd companies being registered on the platform in various stages of our registration, and by the end of this year, and probably in the 18 to 24 months, we should be able to cater to a total aggregate funding of around 100 million is what our goal is.
All right, man. Congratulations with that, and all the best for you to be able to achieve those numbers there. So that's a new platform really coming in for startups, SMEs, and of course, the markets are watching out for that quite clearly.
All right. Thanks so much for that, Manisha. Well, keep an eye out on the stock markets. Then ITC is the big heavyweight in there. That's putting some pressure on the index. So we get the intraday chart of that stock up for you. SBI as well is seeing some selling pressure. So that's not helping the Nifty scores. While on the flip side, you have stocks like Titan that was trading in the red, that's moved into the green. Yes Bank is saying yes, really, because when you have the Nifty Bank that's down close to around 50 points, but you have Yes Bank that's moved to the high point of the day, telling you some strength in that counter. But as we wrap up on the show, we'll leave you with some market opinion coming in from Gautam Shah of JM Financial. Stay tuned. Business Lunch comes up next.
I think it's really climbed a wall of worry in the form of not reacting to adverse news flow. I think there has been a lot of news flow that the market has been fed in the recent past, whether it's FII outflow, the fact that the mid-cap carnage happened, monsoons have not been all that great, oil has done what it has, rupee tested a level of 69, and with all this ammunition, the markets managed to hold on to support levels. So I would like to believe that this market is setting up for much higher levels. About 11,300 to 11,400 is where we could move to in the next few weeks. And I think we seem to have made a very strong trading base around the 10,850 level. Over the medium term, we are still maintaining our call that by the end of this year, you could see the Nifty trading closer to 12,000 levels. I'm of the view that the mid-cap pain could now be behind us, and once the CNX mid-cap 100 gets past the level of 18,700, you could actually see a very strong recovery that takes the index back to 20,000 and eventually to 22,000 and beyond, possibly by the end of this year. So I think that the fall in the mid-cap space has got arrested around the 17,800 level, and if that is a possible bottom, I think this is a great opportunity to be buying into the mid-caps.